numbers. We've had some good growth numbers, but the return to capital is actually larger than the return to labor. Distributional story has been getting worse, not better.
Really, really fascinating. Paul, on the inflation data on Friday, pretty benign. The markets liked it. Certainly Treasuries rallied on the back of that print. It seems to be heading in the right direction. The Trump administration is certainly cheering what is happening with inflation. Are we underestimating the AI impact on inflation as we look at memory chip prices, for example? Is AI inflationary, at least in the short to medium term of this innovation?
Yeah, that's a tricky one, right? Well, it should be a positive supply side boost, and that would tend to be disinflationary. But let's remember, the Fed is looking at broad-based price increases, right? They're not looking at one sector going up and the other sector going down. But you're right on the recent data point in the U.S. inflation numbers, right? We had another moderate print. I wouldn't bet the ranch on making a policy move on 1 point. But we're still in the thought that the Fed is probably going to be on hold for the first part of the year, particularly if activity starts to pick up. But they have a couple of cuts later in the year. We've got the Fed funds neutral rate a little bit above 3%. So there's another 50 basis points to go to neutral. But given that the labor story is a bit better and given that growth looks like it's picking up and looking at financial conditions being moderate overall, there's certainly no hurry in our view for the Fed to move.
Paul, as you look beyond the US, are there any economies out there that stand out to you where you're starting to see maybe green shoots that are stronger than maybe the markets are pricing for? Is there a geography or an economy out there that is maybe looking a little bit perkier than maybe some are expecting? What are you seeing more globally?
Well, the first thing I would answer to that is if you look at this data center boom in the U.S., it's actually pulling in imports from a couple of other economies. Taiwan's exports are booming. We're seeing a bit out of South Korea and Malaysia as well. Ireland is another country where pharmaceutical and to a lesser extent tech exports are picking up. So, the U.S. is the U.S. good growth story sucking in some imports from the rest of the world. In terms of region, we still see China struggling with the overinvestment in property. But Europe is looking pretty good. I mean, we have to base that story on, European growth trends. But the combination of the releasing of the debt brake for defense and tech spending, et cetera, European growth looks like it's heading a little bit higher as well. So you put all those pieces together, a little stronger in the U.S., a little stronger in Europe, kind of flatlining in China. It's not a bad story for 2026.
Okay, really, really interesting insights. Paul Grunwald, Global Chief Economist at S&P Global Ratings. Paul, thank you for your time and your insights. Coming up, we're going to switch focus to what is happening in the mobility space. Waymo on the road to reach 1 million paid weekly robo-taxi rides. That is according to the Coast CEO. That conversation is coming up next after the break. This is Bloomberg.
China struggling with the overinvestment in property, but Europe is looking pretty good. I mean, we have to base that story on, European growth trends, but the combination of the releasing of the debt brake for defense and tech spending, et cetera, European growth looks like it's heading a little bit higher as well. So you put all those pieces together, a little stronger in the U.S., a little stronger in Europe, kind of flatlining in China. It's not a bad story for 2026.
Okay, really, really interesting insights. Paul Grunwald, Global Chief Economist at S&P Global Ratings. Paul, thank you for your time and your insights. Coming up, we're going to switch focus to what is happening in the mobility space. Waymo on the road to reach 1 million paid weekly robo-taxi rides. That is according to the Coast CEO. That conversation is coming up next after the break. This is Bloomberg.
Power Players is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard,
Oh boy.
can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that.
And the speed of the business has never moved faster.
My career might stop, but I'll still be driving some.
Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Verdon in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Bringing you up-to-the-minute global economic news whenever and wherever it happens. I'm Lizzie Verdon in Florence, Italy, and this is Bloomberg.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart European headquarters. We bring you the day's top.
Welcome back. Waymo looking to hit more than 1 million paid weekly rides in the US by the end of this year, according to the co-CEO, Tegedra Mawakana, the leader. Recently spoke with Bloomberg Tech's Ed Ludlow about the robo-taxi firm's global expansion plans.
We are just laser focused on execution. Building Waymo to be financially responsible, operationally excellent, and then make sure we maintain the safety culture. Like, that's what we're really focused on. Having this vote of confidence, as you said, not only from Alphabet, but from our 3 co-leads from this round, and from all of the new investors who decided to join our cap table, and the existing ones who doubled down on their belief that this is the right opportunity to fund. And so we just feel humbled. But also, there's a lot to do. So we're just really focused on making sure that we can scale, focusing on our 2 first international launches, London and Tokyo, and scaling across the United States.
We do not yet have, although there has been progress toward just this week, a federal level framework, set of rules. What do you think the direction of travel is with that? And clearly, if you had to deal with one set of rules and not a city by city, let alone state by state basis or case, you'd be making a bit more progress, I suppose.
Yeah, we think it's really important that there is a federal AV standard. We've been advocating for sort of a safety case-based approach because the technologies are different, and we think if the burden should be on companies to demonstrate why you believe your technology is safe enough, we also think there should be transparency requirements. People should have to demonstrate how many trips are you providing. Right now, the balance isn't quite there. I mean, some states require a lot of reporting, some don't require as much reporting. I think the United States has an opportunity with this technology to lead globally. And I don't think you can lead globally if it's a framework that's governed by multiple jurisdictions across the states. And it's a way to slow down the adoption of this technology, not only in the U.S., but in other markets.
New York City, not necessarily New York State. A lot of people want to know what's the roadblock there, pardon the expression, and what's the timeline. You work closely with the authorities, but that is a big potential market.
Yeah, that's a market where, we're just going to have to do the work and demonstrate our safety outcomes and earn the trust and chisel away at it over time.
Do they have the rules for you to follow?
They do not have rules that allow the human operator to be removed from the vehicle entirely.
And until that changes?
But, there is an interest in doing this in the state, even outside of the city, and that gives us an opportunity to grow more fans, and fans actually are calling for this in cities where our technology can't be deployed. We are seeing organic campaigns spring up saying, I want Waymo in my town.
San Francisco, the Bay Area, is my home, and London's where I grew up. And I was studying the map of the boroughs that you proposed to launch in. And you correct me if my math is wrong, but just based on those boroughs, at launch, this seems to be the biggest citywide deployment from the start that you guys will have done. Is that correct?
They do not have rules. Possibly it's correct. I mean, we're in the phases of figuring out the specifics around the launch and figuring out the actual framework around the launch. And so I don't want to speak too definitively about what we're going to do. But what you're speaking to is we're not gated by the technology.
Right.
And we have the appetite to scale. And we want to partner and do so safely. And we want to earn trust. So that's like there's a lot of levers there that we have to figure out how to strike the right balance and how to make sure that we're introducing it to the community, both to meet the demand and to grow the
I asked because of those 20 cities to come, London is one.
Yes.
And London is now outside of the European Union, but it's, you know, it's kind of your Europe launch.
Yes.
What was that experience like within London's regulatory framework and the UK's regulatory framework?
They've been extremely forward-leaning and interested in seeing how this technology could actually improve safety on their roadways.
Right.
And that's where I think, you know, we find a sweet spot when people are less sort of complacent about the status quo. We're not gated by the technology.
Well, that was Waymo's co-CEO, Takedra Malkana, speaking to Bloomberg's Ed Ludlow. Joining us more on the Waymo story and the broader tech space is Matt Bloxham of Bloomberg Intelligence. Matt, so it is exciting times for Waymo and for those who want to get access to Waymo vehicles in the UK. It's going to be happening towards the second half of this year. We ended conversation there on the regulatory framework in the UK and being forward-leaning. That was the co-CEO's take on the UK government's approach to this. Is she right? Where is the UK positioned in terms of adapting and having a regulatory framework that welcomes robotaxis?
Yeah, it's certainly in process. I think the current timelines that the full driverless autonomous regime won't be in place until 2027. I guess given the political turmoil, as you can call that, in the UK right now, there's maybe some risk around, you know, whether the government agenda kind of supports that, but that's the intended timeline. But there's already, you know, permissions around pilot schemes. Actually, I've seen the Waymo taxis in and around London. I think it's like 24 cars around the city at the moment with, the one I saw had 2 people inside it driving in a kind of monitored, kind of, you know, check, I guess, the kind of the function of the system. But yeah, it certainly seems that, you know, the UK perhaps trying to differentiate itself a little bit from the kind of the rest of the European region, of kind of being progressive and inviting this kind of technology into the city.
Where are we more globally in terms of the robotaxi race? I mean, you've obviously got Elon Musk. You've got Waymo. You've got Wave AI here in London. How is the technology developing? When do we see mass rollout of robotaxis?
Yeah, I mean, I think it does all kind of come down to the regulatory situation. We heard on the tape there that even in the US, you know, New York City is behind other cities in terms of their perspective on whether to embrace this or not. And so I think it is, you know, it's not even country by country, it is city by city that they're going to have to unlock this. And I guess we've seen that in previous situations, like even when Uber first launched, you know, globally, they had to kind of go hand-to-hand combat, if you like, in each city to kind of convince them that this was a good thing to do. And you've got unions and all sorts of other kind of competing interests going on. But, you know, as they've mentioned, they've got a plan for 20 international or 20 markets, including international destinations, London and Tokyo this year at some point. So it's moving in the right direction. The other interesting thing that came out in that tape, and also what's in the press release around the $16 billion funding round early in February, is this real big emphasis on safety. And they really called out in the press release a few weeks ago that statistically autonomous driving is now safer than human driving. I think it's going to be a really important thing for them to message with mayors of cities and government officials.
You know what, as a regular driver in London, I can completely believe that.
Yeah, exactly, yeah. And obviously there are going to be issues, and I'm sure probably in the early days, you know, people are going to single out issues involving a driver, an autonomous taxi, that, you know, kind of really kind of get blown out of proportion. And that if you were actually to put it in the context of, you know, how many people get hit by a lorry or, you know, have kind of collisions, whether it's kind of serious injury or just kind of a small dent, the context is going to be skewed. And I think, you know, there's clearly a lot of data they can point to.
Yes.
You know, look at our, you know, 127 million miles plus of autonomous driving, and look at the safety rate we've got. It's excellent, but it's going to take a lot of convincing to get everybody on board.
Is it fair to characterise this as Waymo is winning this race at this point?
I think it's certainly a leader, yeah, for sure. And yeah, they've got a huge amount of kind of data to kind of back on, and real commercial launches. They talk about 1 million rides a week by the end of the year. They're already at over 400,000 in the US, so it's, they're in an incredibly strong position.
Matt, we want to take some time with you as well to talk about what's happening in the semiconductor space and the piece that we put together, the team have put together today, kind of wrapping up what's happening in the memory space and the constraints there, the supply constraints, what it means for costs and margins. What for you is the biggest pinch point right now? And is there any sign that this gets resolved? The impact of this is significant.
Yeah. I mean, the pinch point is the same we've seen in a lot of cycles previously. There's an unexpected ramp in demand, which this time is being fueled by AI, and in particular NVIDIA, and that's really sucking up all of the capacity. And the experience that the chip manufacturers have of previous cycles, that if they invest too aggressively, the cycle turns, they're left with stranded capital, massive dip on margins, underutilized capacity. And so I think even though we've seen the likes of TSMC have quite bold capital spending plans for the next year, they're even in that saying, we've had to think about this quite carefully to make sure that we don't end up with stranded capital. So it's that classic kind of push-pull demand supply issue. Obviously, we've seen Elon Musk suggest that they may be even going to make their own fab plant to address this issue, which potentially adds to the headache in a couple of years of excess supply.
We'll see if that becomes a reality in terms of Musk's plans around a foundry. Matt Bloxham, thank you very much indeed of Bloomberg Intelligence. Appreciate the insights. That does it for me. Our market coverage, though, continues right here on Bloomberg. US futures pointing to gains of 0.3%. Here in Europe, you're seeing upside of around 0.3 on the benchmark Stoxx 600. Stay with us. This is Bloomberg.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
US futures gains of 0.3%.
A cidade estava sitiada.
Nisso eu começo, eu também não sabia o que fazer. Foi a mais terrível que eu passei na minha vida.
Eu temo, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home, they are suffering. And someone is driving a Range Rover with their money.
I think she's a scam up to now. It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
I think she's a scam up to now. It's some of the world's most desperate people who are getting ripped off.
2026 for us is the year that everything just comes together, right? We're not just moving money. The last decade, literally, we've been the race for Africa's growth, right? And the future of Africa, in our opinion, is not hype, it's infrastructure-led. When Africa wins, the global economy wins. We're building the pipes, and those pipes are now off age. Now, as of right now, We are the biggest fintech in Africa, the most licensed non-bank entity. In the last 10 years, we built that muscle. Now we're putting that to the test, all right? Now we've covered the entire world. We have UK, US, UAE, Canada, Europe covered through our partnership with Global Open, for example, and Nuvian. And the point behind that really is, how do we ensure we use that infrastructure to drive the next phase of growth for Flutter Wave by empowering our customers across all our segments? 2026 for us is the year that everything just comes together, right? We're not just moving money.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Welcome to Bloomberg Markets. I'm Bonnie Quinn, along with Nora Melinda joining me today. Coming up, stocks gaining after cooler than expected U.S. inflation data reinforced expectations. The Fed will cut rates this year. Warner Brothers Discovery considers reopening talks with rival studio Paramount despite a parting agreement with Netflix. Plus, a Bloomberg exclusive interview with U.S. Secretary of State Marco Rubio on the sidelines of the Munich Security Conference. We do have futures pointed just a little bit higher now as we see Europe gain slightly on this holiday shortened trading week. It is President's Day, of course. Markets in the U.S., equity and treasury markets are closed. But we do, as I say, have trading in Europe, and we are seeing most of the major indices higher. Some maybe positive sentiment after the CPI data out of the US Friday. You see Bitcoin as well is down about 0.6%, around $68,000, but gold is holding on to that $5,000 mark. Our first guest this morning says the Great Rotation will be on display this year despite high geopolitical and US policy uncertainty. Ben Naylor of Bradesco writes, "We are most bullish on EM and a tech and commodity sector barbell and see a broadening rally as bullish." Ben joins us now. Ben, so happy to have you. Thanks for joining us on this President's Day. Look, it's been a very difficult, I think, wouldn't be a bad word to use about the first few weeks of the year. What should we expect into the rest of February now that we have most of earnings season really behind us? But we do, as I say,
yeah, I think the sort of tectonic plates of this sort of bull market that we've sort of got used to over the last 5-6 years, of it all being US and it all being about tech, I think those are shifting, and I think that has necessarily or inevitably driven some volatility into the market. But I think it's ultimately bullish. This is a market which is broadening out to international. It's broadening from growth to value. It's broadening from large to small, from tech to cyclicals. I think that's all very, very positive. Now, again, we got very crowded. Tech in the US got very supersized, so this is not a painless process. But ultimately, I think it's very bullish.
How convinced are you, Ben, that investors are actually mindfully choosing this rotation? And how much is it driven out of fear and maybe even by the retail trade to an extent?
Of this sort of bull market that we sort of got used to. I guess my flippant point is I don't care, right? I don't really mind whether this is driven by conviction or whether it's driven by, risk management, right? That international did very well last year and people have been very underweight, and therefore I'm going to narrow that bet. Or whether it's, I believe in the international story that earnings are accelerating and I want to own more of that. As an allocator, I don't care. They both work. I mean, what's interesting about having lived the last decade where we just got very focused on the US, very crowded on tech, these other assets just became very small, and that means that a little bit of love, a little bit of reallocation can go a very, very long way. We saw that last year with international outperforming the US, and I think we're beginning to see this year with value beginning to do well, small caps beginning to do well. I think we're just broadening out, and again, whether this is out of conviction or risk management, I don't know.
A quick follow on that, then, because I hear what you're saying, right? It doesn't matter if there's buying going on, there's buying. If there's more buyers than sellers, then great. But if this isn't a conviction-motivated trade, then it might be shorter-lived, right? So you do have to take that into account.
I don't care. They both work. Absolutely. But I do think this is based on fundamentals. Growth is picking up in the rest of the world. You know, that's good for international, that's good for cyclicals, that's good for value. That's partly been driven by what's going on with tech. We're seeing that tech supply chain beginning to post some very strong growth. But more broadly, this is a barbell market. Tech's been doing okay. We've just come off a 30% growth US earnings season for tech, but it's also commodities and industrials, and these old economy sectors are also doing very, very well. And I think that's telling you a lot about the fundamentals, that growth is accelerating, but it's also telling you about the setup, that these are very small, they got very cheap, they got very unloved, and again, a little bit of love goes a long way.
Because of course we know people have been a bit skeptical right now, given all that's going on. Where else do you see opportunity?
I do think this is based on. I mean, I still like tech. I just think that we've sort of squeezed that US tech lemon as hard as we can. You know, valuations are high, earnings expectations are high, margins are high, but EM tech is on half the valuation. There are Korean tech stocks where earnings are rising right now faster than the stock prices are, and it's the best performing market, in the world this year. So, there's a lot of growth coming out of tech. It's just what you're prepared to pay for it and how much of that is priced. And I think we're finding opportunities, in other bits of tech rather than in the US.
Yeah. How are you viewing value stocks right now?
A little bit of love goes a long way. So I think this is a great rotation. We've, again, feasted on growth for, a long, long time here. I think, a little bit of extra growth, and you're seeing the value stocks really fly, and they're very heavily weighted in the rest of the world, very heavily weighted in emerging markets. I think that's a big driver behind what's going on in those markets. Brazil, a market I look at a lot, one of the cheapest markets in the world, one of the biggest value markets in the world, doing very well. So I think, this is a great rotation, and part of that is growth to value, and just this firming up of global growth expectations, whether it be lower rates or whether it be because of more fiscal spending.
Many different directions potentially to go in on your theses, Ben, but let's just start on the tech one and the idea that perhaps there's better value outside the United States at the moment, given how richly valued or potentially richly valued some of these sectors in the US are. How do you know that Korean stocks are undervalued relative to, say, Chinese tech stocks or Japanese tech stocks, given that the world order is shifting, and to an extent you have to make a geopolitical decision here as well?
In those markets, Brazil, a market I look at a little bit, but I do think the lesson from the last year and a half is the market is taking geopolitical risk a little bit, in its stride. There's plenty of geopolitical risk out there right now, but we've just posted 13, 14% earnings growth in the US. That's been led by stocks which are much more focused on the rest of the world. And so I mean, I don't want to downplay the geopolitics. It's part of the investment environment, but I also don't want to overemphasize it.
Well, I suppose I mean something a little more nuanced, and I should make it clear. I don't particularly mean that China might one of these days invade Taiwan. I don't particularly mean that as a geopolitical risk. I mean that you're choosing, US or China or Japan as a winner in the AI trade, for example.
Yes, so I think they're a little bit different. So China is very much this, closed ecosystem, national team. That's one story. But Korea, Taiwan, that is very much the downstream supply chain of what's going on in the US. I think I can get it cheaper, and B, in what we're seeing in DRAM pricing right now, there are these pinch points, and different stocks like the Korean producers are really benefiting from that right now. So it's all part of that US big tech trade, but there are definitely pinch points and opportunities along that supply chain.
Ben, where are some opportunities for returns that you believe the market may be underappreciating right now?
So we talked a lot about tech, but you mentioned value. I think these sort of deep value, old economy markets, Brazil I talked about before, one of the cheapest markets in the world with the highest real interest rates in the world that they're about to start, cutting. A lot of these assets have underperformed for a very long time. They've got very small, very out of favor, and very cheap. And so therefore, if interest rates do come down, if growth begins to, pick up a little bit, you not only get the fundamentals turning in your favor, but I think the technicals, work very much as well. So, I would say Brazil, sort of old economy EMs. We're running a sort of barbell right now. Tech, we still like tech, just be a little bit more selective. And these sort of old economy, forgotten bits of the market.
That's thanks to Ben Lidler, head of equity strategy at Bradesco Securities. Now turning to the commodities sector, precious metals drifting lower in thin trading with gold holding near $5,000 an ounce. Joining us now to talk about this and more is Bloomberg's Jack Ryan. Thanks for joining us, Jack. Tell me a little bit about what you're watching right now in the commodities market. There's been so much focus specifically on precious metals like gold and silver.
Yeah, absolutely. I mean, this is quite an interesting week because we have Chinese markets obviously closed through the week. The bid from China has been really important over the last couple of months, particularly for metals like silver, platinum, also industrial metals like copper, etc. Gold less so, but still important. And so there's been an interesting question, which is how are prices going to react through this week as that Chinese bid obviously disappears? I mean, the obvious implication would be that you could see some downside if you don't have that demand. But of course, as always in markets, if something's known in advance, it may well be priced fully. Speculators might be willing to take advantage of that. So I know that if we look historically through this period, this holiday period, there hasn't actually often been a very predictable downside that you might expect. But that's one of the things to watch for this week in precious metals.
Yeah, I mean, will it at least give us a degree of transparency into who's actually been doing this buying, Jack? I mean, we know the central banks have, we know there's been a retail trade out of China and India in particular, but if that trade disappears this week, does that mean that much of this run-up has been retail driven?
Well, I think it's generally true to say that over the last couple of months that retail has been a really important part of it. And you can see that even in where the buying is happening. Like, for example, a really important part of the price movement over the last couple of weeks and months, particularly leading up to that kind of really extreme rise and then extreme sell-off at the end of January, was all of this options activity, record options buying on, call option buying on the biggest gold ETFs and the biggest silver ETFs. That's actually become quite a popular way for retail investors to speculate on precious metals. And that has driven a lot of the activity, and we can still see that those volumes are still quite high, that actually there's still a lot of call option buying since that, even after that quite dramatic sell-off. So that's been an important part of it. And then also physical demand in some of those large markets, India and China combined, they buy 1 ounce out of every two of gold that's dug out of the ground every year. And just anecdotally, we know from stories coming from those markets and also from 1 or 2 data points that we can identify that actually demand has been quite strong in those markets for bars and coins. So we know retail has been an important part of it. What gives some investors some more confidence in gold has been this, what they call central bank backstop, that essentially the belief is if it sells off 10%, 20%, to some level, the belief is that these large central bank buyers who have a long-term strategic objective to buy gold will come in and buy those dips. And that might explain the price behavior of gold over the past couple of years where we haven't seen really big drawdowns.
Well, everyone's really had their eyes on gold, which we know is hanging just below that $5,000 mark right now per ounce. But why is gold moving the way that it is? I know you mentioned some of the reasons, but I'm curious, is any of this inflation expectations or even geopolitical fears? To what degree is this really being priced into gold right now?
Definitely. I mean, probably inflation expectations in the US and what the Fed is going to do is probably the major driver of intraday moves in gold, and that tends to be the case. And so it's moving on. The CPI data last week, that was positive for gold. The reason why gold is so sensitive to this is because, your gold is not paying you anything. And so if rates come down, gold becomes relatively more appealing compared to treasuries or something like that who are going to give you a yield. So gold tends to benefit from soft data, anything like that. And that has been quite an important mover for gold, and probably will be, it may well be the most important throughout this year, trying to assess what the Fed is going to do next.
Yeah, and I mean, it's fascinating because we got that pretty benign CPI data Friday, and we've also had jobs reports that haven't shown a tremendous amount of fragility in the job market, so it's interesting that gold is still at that $5,000 mark. Jack, thank you so much. That is Bloomberg's Jack Ryan joining us. Coming up, sources saying Warner Brothers is considering reopening talks with Paramount following the hostile suitor's latest offer. Details next. This is Bloomberg.
The reason why gold is so sensitive to this is because, your gold is not paying you anything. And so if rates come down, gold becomes relatively more appealing compared to treasuries or something like that, who are going to give you a yield. So gold tends to benefit from soft data and anything like that. And that has been quite an important benefit for gold, and probably will be, it may well be the most important threat this year, trying to assess what the Fed's going to do next.
Yeah, I mean, it's fascinating because we got that pretty benign CPI data Friday, and we've also had jobs reports that haven't shown it. Jack, thank you so much. That is Bloomberg's Jack Ryan joining us. Coming up, sources saying Warner Brothers is considering reopening talks with Paramount following the hostile.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question.
I mean, I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean,
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular